Stop scrolling. This is huge for every American retiree, senior, or anyone counting on Social Security. The White House has confirmed it. Thanks to the One Big Beautiful Bill in 2026, the vast majority of Social Security payments are effectively tax-free. That's right. Up to 88% of seniors receiving benefits will pay zero federal income tax on their Social Security checks. We're talking about the largest tax break in history for America's retirees, putting extra money back in your pocket every month. No more watching a chunk of your hard-earned benefits disappear to taxes. Imagine keeping more for groceries, prescriptions, travel, or just enjoying the retirement you deserve after decades of work. This game-changing relief comes from a new senior deduction that wipes out the taxable portion for most people aged 65 and up, especially if your income falls in the middle range. The White House, Council of Economic Advisors, and Social Security Administration are all backing this historic shift. But here's the catch. Not everyone qualifies automatically. Higher earners might still owe something, and rules can be tricky. You need to know exactly how this affects you, how to maximize your savings, and what steps to take before tax season hits. If you're ready to claim every dollar you've earned and keep more of your Social Security in 2026, smash that like button right now, drop a yes in the comments, and stick around. We're breaking it all down next. All right, let's jump right in. Because this isn't just some minor tweak. This is a massive win for millions of you out there who've worked your whole lives and deserve to keep every penny of what you've earned. So picture this. You're sitting down with your Social Security check each month, and for years, maybe even decades, a portion of it has been getting clawed back by federal taxes if your income hits certain levels. Up to 85% of your benefits could be taxable depending on your combined income from pensions, investments, or even part-time work. That meant for a lot of folks, especially those in the middle income range, hundreds or even thousands of dollars vanished every year just to Uncle Sam. But thanks to the One Big Beautiful Bill signed into law last year, that's changing in a big way for 2026. The core of this relief comes from a brand new senior bonus deduction, an extra amount you can subtract from your taxable income if you're 65 or older. This deduction stacks on top of the standard deduction, which is also getting a nice inflation boost. The result? For the average retiree, your deductions now exceed the taxable portion of your Social Security benefits. The White House Council of Economic Advisors crunched the numbers and found that 88% of seniors receiving Social Security will pay zero federal income tax on those benefits starting with the 2026 tax year. That's right, 88% keep it all. The Social Security Administration even put out a statement applauding the move, calling it historic relief that lets nearly 90% of beneficiaries hold on to more of their hard-earned money. Let me break it down simply so you can see exactly how this plays out for real people. Take a single senior getting the average Social Security retirement benefit, around $24,000 a year. Under the old rules, if you had some other income pushing your combined total over certain thresholds, like $25,000 for singles, up to 50% or even 85% of your benefits could get taxed. But now, with the senior bonus deduction layered on, your total deductions jump high enough to wipe out that taxable amount entirely. You end up owing nothing on your Social Security. That's potentially $1,000 to $3,000 or more staying in your pocket annually, depending on your exact situation. Now imagine a married couple, both collecting, say each getting that $24,000 average for a combined $48,000 in benefits. Previously, they might have seen $3,000 to $5,000 or more go to taxes if they had modest additional income from savings or a small pension. But under this bill, the deductions for both spouses push their taxable income so low that their Social Security stays completely off the tax radar. The Treasury Department's own examples show scenarios where couples who used to owe thousands now owe zero. It's the largest tax break in history specifically targeted at America's retirees. If you're watching this and thinking, wait, does this mean my check is going up? Not exactly. Your monthly Social Security payment stays the same amount, but come tax time, you get to keep way more of it. No more seeing a big chunk disappear. That extra money can go toward groceries, medications, home repairs, visiting grandkids, or just breathing a little easier knowing your retirement is more secure. And for those of you who are still working part-time or have some investment income, this deduction acts like a shield, protecting your benefits from getting taxed away. But let's be real. It's not 100% tax-free for absolutely everyone. If you're a higher income senior with substantial other earnings, like a big pension, large investment withdrawals, or rental income, you might still have some taxable portion. The thresholds haven't gone away entirely. This bill uses deductions to make the math work in favor of most middle and lower income retirees. The White House analysis is clear. The vast majority, that 88%, see zero tax on benefits. But if your combined income is very high, you could still owe something. That's why it's so important to run your own numbers. Don't just assume. Check. Speaking of checking, head over to your My Social Security account on ssa.gov right now if you haven't already. You can see your benefit estimates, earnings record, and even use the IRS withholding calculator to adjust how much tax is taken out of your monthly check. If you're not withholding enough, you might end up with a surprise bill next year. But with these new rules, many of you can stop withholding altogether or reduce it to almost nothing, putting cash back in your hands every month instead of waiting for a refund. If this is hitting home for you, drop a yes in the comments below and tell me, are you single, married, or helping a parent with this? I read every comment, and it helps me tailor more videos to what you need. One thing I want to emphasize is the urgency here. Tax season for 2026 income starts early 2027, but the changes apply to income earned in 2026. That means your January 2026 check already falls under the new rules when you file next year. If you've been over withholding for years, you could be sitting on a bigger refund than ever. Or better yet, stop the withholding and enjoy the extra in your pocket monthly. Talk to a tax professional or use free tools from the IRS or AARP to model your situation. Don't wait until April to find out. And let's talk about state taxes for a second because this is federal relief, but 9 states still tax Social Security benefits in some form. Places like Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and others have their own rules, though some like West Virginia are phasing it out completely by 2026. If you're in one of those states, this federal change doesn't automatically erase your state tax, so check your state's revenue department site. But for federal, huge relief. Think about what this means long-term. Retirees have been fighting for this kind of break for years. No more penalizing people for saving or having a modest pension on top of Social Security. The bill reaffirms that if you've paid into the system your whole career, you get to keep more of it. It's a promise kept, and it's already starting to deliver. Millions are projected to see their effective tax rate on benefits drop to zero, freeing up billions in total for seniors to spend in their communities, support families, or just live more comfortably. If you're feeling that excitement, smash that like button again. It really helps the algorithm push this to more people who need to hear it. And subscribe if you haven't, because I'm going to keep tracking every update on this, from how to maximize your deduction to what happens if Congress tweaks anything else. Hit the bell so you don't miss the next one. Share this video with your parents, grandparents, or any retiree in your life. Text it, email it, whatever. The more folks know, the more they can plan and benefit. Let's keep going because there's so much more to unpack. For example, how does this interact with other income sources? If you have a 401k or IRA withdrawals, those are still taxable, but the senior deduction helps offset them. Say you're single, pulling $20,000 from retirement accounts plus $24,000 in Social Security. Previously, that combo might have made part of your benefits taxable. Now, the extra deduction often wipes it out. Treasury scenarios show tax bills dropping from $7,000 plus to zero in some cases. For couples with higher combined income, the math still favors big savings. Even if you owe a little, it's way less than before. This isn't just pocket change. It's real money that can cover rising costs for healthcare, utilities, or fun things like travel you've put off. One more tip. If you're approaching 65, make sure you're claiming this deduction correctly on your 2026 return. It's available whether you itemize or take the standard deduction, so it's easy. Use tax software that updates for the new law, or get free help through Vita programs if your income qualifies. Small steps now can mean thousands kept later. Hey, if this is making sense and you're pumped about the extra cash, comment "more money" below. I want to see how many of you are in this boat. And if you have questions like, what if I have a pension? Or how do I adjust withholding? Drop them here. I'll answer in the next video or pinned comments. Keep the conversation going. It helps everyone. This change didn't happen overnight. It took advocacy, legislation, and a focus on putting American seniors first. The result is a system that's finally recognizing the value of what you've contributed. No more watching benefits get taxed away when you need them most. It's empowering, it's fair, and it's here. If you're still here, you're clearly invested. Hit subscribe and turn on notifications so you catch every update on retirement, taxes, and how to make your money go further in 2026 and beyond. Share this far and wide. Let's get this info to every retiree who deserves it. Let's get even more practical now because knowing the big picture is great, but what really matters is how this lands in your actual bank account and your actual life. Let's walk through a few more real-world examples so you can picture yourself in one of them. Imagine you're a 68-year-old widow living in a modest home in Ohio. Your Social Security is $1,950 a month, about $22,200 for the year. You also get $9,000 a year from a small pension your late husband left you, and maybe another $4,000 in interest and dividends from savings you've carefully built over 40 years. Under the old rules, that combination would have put you right in the zone where up to 85% of your Social Security became taxable. You were probably losing $2,000, $3,500 every year to federal income tax on your benefits alone. That's money you could have used for home heating bills, better food, or just a little less stress each month. Now, with the senior bonus deduction fully in effect for 2026, that same income profile gets completely shielded. Your total standard deduction plus the new senior deduction is high enough to make your taxable income drop so low that your Social Security benefits are no longer taxed at all. That $2,000 to $3,500 gone from the IRS's pocket and back into yours. That's not a small thing. That's groceries for months. That's prescriptions without choosing between brand and generic. That's a little breathing room. Now let's look at a couple in their early 70s in Texas. He gets $2,200 a month from Social Security. She gets $1,600. Together, about $45,600 a year. They also have a small rental property that nets them $18,000 after expenses, and they take $12,000 a year from an IRA to help cover living costs. Before the new law, they were almost certainly paying tax on a big chunk of their Social Security, probably $4,000, $6,000 a year. That was painful. They felt punished for trying to stay independent and not rely 100% on benefits. In 2026, the math flips dramatically. The doubled senior deduction for married couples, one for each spouse, plus the higher standard deduction wipes out the taxable portion of their benefits. Treasury's own modeling shows couples in this exact income range dropping from owing thousands to owing zero on their Social Security. That's thousands of dollars a year they get to keep. Thousands. I want you to really feel that number. Thousands of dollars staying in your control instead of being sent to Washington. That's not theoretical. That's what 88% of current beneficiaries are projected to experience starting with the 2026 tax year. If any of these examples sound even a little like your situation, or your parents, or your in-laws, do me a favor right now. Smash that like button so hard the algorithm knows this video needs to reach more people just like you. Seriously, if this is hitting home, hit like and drop "This is me" in the comments. I'm reading every single one, and seeing that helps me know what to cover next. Now, let's talk about something super important that a lot of people miss. How to actually get this extra money in your hands sooner rather than waiting for a big refund check next spring. Right now, many of you have federal income tax automatically withheld from your Social Security check every month. That's been smart in the past because you didn't want to owe a surprise bill. But with most of your benefits becoming non-taxable in 2026, that withholding is basically sending money to the government that you don't owe anymore. And they're happy to hold it interest-free until you file your return. You can change that today. Go to ssa.gov, log into your My Social Security account, and update your withholding election. You can lower it, stop it completely, or set it to whatever level makes sense for any remaining taxable income you have. Even if you only reduce it by half, that's more money hitting your bank account every single month starting in January 2026. That's real cash flow improvement, not just a once-a-year refund. If you're not comfortable doing it online, call the Social Security Administration or visit a local office. They'll walk you through Form W-4V. It takes minutes, but the impact lasts all year. And here's a pro tip. Do this before the end of 2025 if you can. That way, your January check already reflects the change. If you wait until after the new year, you'll have a month or two of over-withholding before it catches up. Small move, big payoff. If you're planning to do this, type, "I'm adjusting my withholding" in the comments right now. Let's see how many of us are taking control of our money this year. I'll pin the top comments so everyone can see they're not alone. Now I know some of you are thinking, okay, this sounds amazing, but what if my income is higher? What if I'm still going to owe something? Fair question. If your combined income, wages, pensions, interest, dividends, capital gains, IRA distributions, is significantly above average, you might still have a taxable portion of your benefits. The new senior deduction is generous, but it's not unlimited. The higher your other income climbs, the more of your Social Security could remain taxable. But even then, most higher income seniors are still going to pay far less than they did before. The deduction claws back a meaningful amount even for people in the $75,000 to $150,000 range. So while it may not be zero tax, it's still a very large reduction. The key is to model it. Use the IRS withholding estimator. Plug your numbers into updated 2026 tax software previews. TurboTax, H&R Block, and Free Tax USA already have beta versions out. Or sit down with a tax professional who knows the new law. 5 minutes of math now can save you thousands later. And if you're helping a parent or grandparent who doesn't use computers, grab their latest SSA 1099 when it arrives in January and run the numbers for them. You could literally hand them thousands of dollars in savings just by doing the paperwork. Speaking of helping others, this is one of those videos you should be sharing right now. Text it to your mom, email it to your uncle, send it in the family group chat. Retirees are busy, they don't always catch breaking news, and they definitely don't want to miss out on money they're entitled to keep. If you share this video with just one person who ends up saving thousands, that's a massive win. So go ahead, pause this for 10 seconds, send the link, then come right back. I'll wait. You're back? Awesome. Let's keep the momentum going. Another thing people are asking me nonstop. Does this affect Medicare premiums or the Part B IRMA surcharges? Short answer. No, it doesn't directly change them. Medicare Part B and Part D premiums are based on your modified adjusted gross income, MAGI, from 2 years earlier. The senior deduction lowers your taxable income, which can lower your MAGI in some cases, but the effect is usually small and delayed because it's a 2-year look-back. So don't count on this automatically dropping your Medicare premiums. But it is possible for some people, especially if you were right on the edge of an IRMA bracket. Again, run your numbers. It's worth checking. All right, we're getting deep now, and I love that you're still here. That tells me you're serious about protecting your retirement. If you're serious, do 3 quick things for me. Smash that like button again. We're trying to get this in front of every retiree possible. Subscribe and hit the bell. I'm going to be dropping follow-up videos, how to file correctly in 2027, common mistakes to avoid, state-by-state breakdowns, and more. Comment one thing: single, married, widowed, or helping parent. I'm going to use those comments to shape the very next videos so they hit exactly what you need. This law is a big deal. It's not perfect, it's not universal, but for 88% of Social Security recipients, it means zero federal tax on their benefits starting in 2026. That's money you earned, Money you paid into the system, money you deserve to keep. Let's make sure you get every dollar. Keep watching. I've got more examples, more tips, and more ways to maximize this coming up right now.